Hi, this is Mike Maloney, and this is the latest Insiders Report, and it's also an action alert. It's been a while since I've taken an action, and I'm going to be making another purchase, and it's because of the setup that we've got going right now based on some technicals and the commitment of traders. And we'll get to that in a moment. But first, I wanted to let you know that the next episode of Hidden Secrets of Money is coming out shortly, and you're really not going to want to miss this one. It is great, and it's about cryptocurrencies. Also, I wanted to let you know that every once in a while we make one of our Insiders videos public. This one we might make public just because of what's going on right now in the market. I just wanted people to see what the current setup is. So, to get to the data that is the reason that I'm making a purchase, this is the Commitment of Traders report, and all of the insiders here, we've been following this for quite a while. And again, the blue area represents the net short position of the commercial traders, the big bullion banks like JP Morgan and so on. And the red area that's in the background behind the price here, the price is this gold line on gold, and the red area that's in the background is the percentage of open interest. This is the total number of contracts on the commodities exchange, and it's the percentage that the net short position of the commercials have longs also, so they're both long and short, but if you deduct their longs from their shorts, these are the shorts that are left over. And so it's the percentage that this represents of this. So one of the things that you'll notice is that when they're not very short, almost no shorts at all, that tends to go with some sort of market bottom. And if you go up to a market top, and then you go down here and look at what they did, they just keep on betting more and more and more that the price is going to go down as the price rises. So they're losing on these contracts here. They're getting squeezed, but they keep on adding more and more and more of them. And eventually a top comes in, and then as the price falls from these tops, they cover their short position and they make a profit. On this price decline here, they're making a pretty good profit. You'll see this same thing repeated over and over again. Now, let's take a look at the price action for this area here. The Commitment of Traders reports, the information is compiled from a Tuesday, but they don't make it public until later in the week. So I just generated this chart. It's on the weekend right now. So this is Friday's information. And so Friday, Thursday, Wednesday, Tuesday. So they covered their shorts on this day that it dropped big and they made a profit. And then if we go back to the Tuesday before that, this is Monday, Friday, Thursday, Wednesday, Tuesday. That turned out to be a high. And so if you look back at so the previous one was a high. See, they actually had added to their short position on that high. So they were adding this was a Tuesday. So Monday, Friday, Thursday, Wednesday, Tuesday. So it was way down here, and they added to their short position on the way up, and then they won on the way down. When they buy back those shorts, they're winning. But that information is from here, and we had another 3 trading days after that, and the price dropped significantly during that period of time. Now let's take a look at what silver did. And silver dropped a bit more than gold. They covered a whole lot more of their short position, and they also covered, instead of expanding like they did here on the previous week, they had covered a little bit on the previous week. And the percentage that this represents of the open interest, you'll notice open interest went up, but their net short position went down. And the percentage that this represents of open interest has fallen from almost 40% down to like 33%, something like that. So what this tells me, though, is that we're getting closer to a bottom. And the bottom might already be there. I'm not sure, because like I said, the data is from the previous Tuesday. So this is Friday, Thursday, Wednesday, Tuesday. So it's from, they're closing out their shorts, and that gets reported here. And then Monday, Friday, Thursday, Wednesday, Tuesday. This was not a high like it was on gold. The previous Tuesday was not a high, and it is reflected in how the commercials covered a little bit of their shorts. But they've covered a lot of them, and that was as of last Tuesday. So that was here. The price has fallen more. It went up on Friday, but not a huge amount. This does suggest that we could be getting near a temporary bottom here because of the covering is from last Tuesday. They've probably covered more, so they're probably down in this area right now, which is where other bottoms have occurred. You get into these low areas and you get into some major bottoms. Now let's look at some other information, reasons that it might be a good time to buy silver. This is the 200-day moving average here, this blue line. And the price of silver is in the background. And so any point in this line, if you take the previous 200 days and add them all up and then divide it by 200, you come out with an average. So this is the average price of the past 200 of these days. Now, whenever it's extended way above the 200-day moving average, in the short term, you're probably not getting a great price. But whenever it's seriously below the 200-day moving average, in the short term, you are getting a good price. And look at what has happened in just the past couple of weeks here. Silver sort of fell off a cliff. I consider it a big bargain right now. I do think it can fall a little bit further. This is the long-term price going all the way back to the beginning of the bull market in 2003. And I first started buying silver right here in April of 2003. So I've been riding this whole thing. I didn't buy any up in this area. I did buy some here in the 30s, though, I do have to admit. But I also bought a lot back in this price dip in the global financial crisis when everybody else was panicking. I was able to increase my position significantly. But what I see here is I've drawn a trend line, and you see a couple of hits back here, and a hit here, and a hit here, and a hit here in the flash crash that happened a few months back. And we're very, very close to this long-term trend line. So it could go down to $15 or just a little bit under, and it could touch this line. But I feel very safe buying right now. I feel like it's a bottom. I feel like this is the time and that I should pull the trigger and make a larger purchase. And so that's exactly what I'm doing. Now, the Hidden Secrets of Money episode that I was telling you about. This is my journey in cryptocurrencies and the evolution, and there is some really big news at the end of this thing. You're going to want to watch it. For those of you that don't know how cryptocurrencies work, this is a pretty good primer on it. You're going to be amazed at how all of this works. We get down inside the guts of a computer, sort of, and try and animate what's going on so that you can understand what a full consensus distributed ledger is, which is the really important part of what cryptocurrencies are. So make sure you watch this upcoming episode of Hidden Secrets of Money. Now, if you're subscribed to our channel on YouTube, there's a little bell next to the subscribe button. Click that bell. That's the alerts bell, because a lot of people that are subscribed still don't get notification that there's a new episode out, and you're going to want to know that this one is out. So click that little bell. If you aren't subscribed to our YouTube channel, please consider subscribing to our newsletter, and as soon as this next episode is out, we will notify you that morning. You can subscribe to the newsletter at goldsilver.com. So thank you very much for listening, and we'll see you next time.